I'm Ben Arbour, the CEO of Data, also the co-chair of the ITFA Financial Crime Compliance Initiative. The FCCi has been around nearly 12 months. It was set up in response to ITFA members' request for a bit more of an emphasis on financial crime compliance in trade finance. It really aligns with ITFA's core values and mission to promote awareness, to increase dialogue, to facilitate networking, thought leadership, idea sharing, also to promote advocacy as an industry group where necessary. We've put together about 40, 50 or so active participants across ITFA membership, banks and non-banks, plus some ITFA non-members. And we tend to meet on a once every 2-month basis. Our focus as a group has been really a bias towards action. We've already published 3 papers. The first on military and dual-use goods. The second on support of defense and military spending and lending from a compliance perspective. And the third, best practice around fintech and bank collaboration and model governance and onboarding and maturing of fintech bank relationships. We've also managed quite a few events, including multiple webinars of which this is one. We've had in-person events, including one in Singapore in May. We had ITFA Week, where we kicked off with a half-day ITFA FCCi event in early July in London. And we're planning more webinars, events, and papers. We have a paper on counterparty risk, which is in progress. We have a paper on tariff evasion risk, which is just being kicked off, a few other things. So we're increasing the momentum in terms of the output, as well as considering what we do from an advocacy perspective. One final point, and I'll hand back to Andre. One of the key focuses of the ITFA FCCi in general and of a lot of our work is the promotion of technology within trade finance compliance. And I think we're going to be covering that today to quite some extent, what technology can do to assist in terms of mitigating money laundering risk, sanctions risk, export controls, bribery and corruption, fraud, etc. Plus promotion of the awareness of what kind of technologies are out there, not just from a theoretical perspective, very much from a practical, what can be deployed technology-wise to address some of these issues, as there are issues, both in terms of potential risk as well as inefficiencies in financial crime compliance, but also opportunities to really move forwards in our industry, but using technology. I said that was my last point. One more last point. We're very much focused on collaboration, another theme of today. So we collaborate across industry associations in particular, standards bodies, multilateral banks, but from an industry association perspective, we collaborate closely with BAFT. We collaborate with ICC. And many other bodies. So it's IIBLP is another. So it's very much a true cross-industry effort. Thanks for being here. Andre, back to you.
Thank you, Ben. Indeed, welcome to all of you. My name is Andre Casterman. I'm on the ITFA board, focusing on the FinTech Committee, leading the FinTech Committee, where indeed we have a number of working groups. FCCi is one of those. And as a banking association focusing on trade finance, of course, those working groups, including FCCi, aim to increase collaboration and demonstrate how collaboration can be beneficial to the core ITFA memberships, which are the banks. So that's the theme of today. And before we kick off into the content of this webinar, I'd like to indeed ask our speakers to introduce themselves. So starting with Hassan of ISNETS. If you can unmute yourself. Thank you.
Yeah, thank you, Andre. Hello, everyone. Thank you for joining this webinar. My name is Hassan Zibdi. I am ISNETS Financial Crime and Payments Advisor, and also I'm managing the trade-based financial crime solution.
Thank you, Hassan. And maybe Hiroshi next.
Yeah, I'm Hiroshi Nakatake of Greif. I'm based in Tokyo. I'm happy to be here.
Great to have you both, Hassan, Hiroshi, and Ben, of course. Ben is indeed co-chairing the FCCi together with Graham Baldock of Citibank. Graham couldn't join us today, but definitely we have his input with us. We're going to have an additional panelist joining us in about 20 minutes, a bit of a last minute change of agenda. So Shalab from TradeMo, another ITFA FinTech member, will join us and join this discussion. As we focused indeed a year ago on the FCCi, kicked it off, we issued indeed a number of papers, and we also read third-party papers. And the paper I read recently is the one of the World Economic Forum called Trade Compliance for Leadership, Navigating a Shifting Global Landscape. It's very recent, September 25, and was developed in collaboration with PricewaterhouseCoopers, PwC. And the paper basically argues that trade compliance has evolved from a back office function, like screening transactions in the back office, to a much more strategic imperative. And in inviting players, not only banks, but of course corporates as well, to focus on the growing applicability of technology and data, to look at new technologies, to address compliance challenges, and to improve internal collaboration. So these are three themes that I thought are interesting and were brought to the market by the World Economic Forum, not targeting banks as an audience, but really corporates in general, including financial institutions. And given the focus of our fintech working group, such as the FCCi, is to promote collaboration and to advocate for more collaborative approaches, and sometimes also for some new market practices to be launched, I thought this time for this webinar, let's focus on how technology and data players work together to deliver more comprehensive solutions to their target audience, which are the lenders, banks and non-bank lenders. So this is why I have invited indeed EastNets as a technology provider, Complete Data as a technology provider, but also TradeMo as a data provider. And collaboration means also relying on institutional standards, which is definitely the role that Greif is filling with the LEI. Of course, we could have many more people on stage, and we do want to have more people on stage. So this theme is something we can definitely continue working on as we organize more sessions. So first, let me start with Hassan. Drawing from the EastNet scope in financial crime compliance, what is the core value proposition of Safe Trade, the EastNet's product for banks, in detecting trade-based money laundering? And then we will look at how you integrate data and third-party technologies.
Yeah, thank you, Andre. Now, to answer this question, I would like to talk about this solution. This solution is trade-based financial crime solution, where it has multiple engines working all together, mainly from screening, watchlist screening, and trade-based money laundering / fraud monitoring. In EastNets, we are well known in this area where we have a well-proven engines like in screening and in AML. When we were thinking about, trade finance, how we will be, covering trade finance related transactions from financial crime perspective, and during our discussions with our customers, we found that, the conventional way of monitoring, the transactions from money laundering, from fraud, or from screening perspective is not really effective in case of trade finance transactions. And to summarize that, the main challenges in trade finance, it's unlike any other transaction. it has a lot of components. We have messages, whether they are related to trade finance, like, you know, the MT700 series, for example, or we have payments, especially to settle those, you know, transactions, or even, you know, for open account or supply chain finance. The other thing is that we have also the documents, which are unstructured documents, and they are crucial part of these kind of transactions from monitoring and from compliance perspective. We are talking about like bill of lading, commercial invoices. It's a prolonged also transaction where you may be you will be like exposed to risk, like for example, if you have any list update, these transactions usually take anywhere between 3 to 6 months. So we thought about all of these kind of things. We have vessels as well. They are part of the transaction. So when we thought about it, we have multiple components. We have, you know, some, let's say, challenges related, for example, to prices. So first of all, we thought to have some sort of a platform where we are grouping all these kind of components like messages, documents all together, and also to be able to digitize those documents, to be able to link vessels, you know, maritime information, doing bill of lading verification. At the same time, we need to have this kind of continuous screening without also having a high rate of false positives for, you know, repeating the screening every time we have a list update. So we came up with, you know, Delta screening, for example. All these kind of things, they need to be in one place. And also from money laundering perspective, we need to have the screening, the money laundering, the fraud monitoring at one place to monitor all these components. So the main value proposition of Safe Trade, the product that we are talking about, is, you know, having a comprehensive and 360 view of the trade finance transactions from financial crime perspective, not only money laundering, is also, you know, including other activities. The other thing, you know, one good thing that we have in Safe Trade, which is actually a unique functionality, where we are checking the prices using generative AI. Now, the over-under pricing is a very, you know, significant issue when it comes to trade-based financial crimes. And usually obliged entities are suffering to have this kind of determination of the prices, especially that you have unlimited number of items if we are counting the brands, the type of goods, the models. And usually the way obliged entities are doing these checks is using the HS code, which is not really effective because HS code will tell you about the goods type, you know, the category of that good, but it will not tell you about the model, the brand, and the prices will be very different from one, let's say, brand to another. So these are the main value proposition or the core value proposition of Safe Trade.
And looking at, okay, now we have understood indeed the positioning that you're at. And of course, now we're going to look at the dependencies you have. So for instance, one set of dependencies are market developments. Which market developments have influenced your roadmap recently and maybe in the future, if you already have some visibility?
Yes. You know, Safe Trade is a very new product. So all these impacts were like happened recently, and already our response was to respond to these, you know, changes in the market and the demand of the market. First of all, the most important thing, as a compliance guy, I will tell you, you know, the regulatory requirements and the international standards. There is a special focus from international bodies and national regulators on trade finance, knowing that, you know, it is estimated that 30% of the total money laundering is related to trade finance, and 60% of those, you know, financial crimes or money laundering that is related to trade finance is related to misinvoicing. So we have, you know, the regulatory driver is the main driver. The other thing is that we have evolving trade-based financial crime risk indicators and typologies, you know, and even we can see that even if you look at the international standards at the environmental crimes, illegal wildlife trafficking, proliferation financing, they are very related to trade finance. We have new risk indicators. We have new typologies. Also, if you look at the geopolitical scene, it is really complex now, and we have a lot of things happening related to, for example, the sanction-related risks, to, let's say, maritime-related risks. So also this is another another driver that impacted our roadmap, which is also related to the dual-use goods, by the way. The issue, or the trend of having open account and supply chain finance, it is very challenging. 80% of the trade finance is related to open account, and open account is really challenging from compliance perspective, because banks or obliged entities, usually they have a very limited access to the information and documents of these transactions. So this has also impacted our, let's say, solution, where we were thinking about how to cover these kind of transactions, and we were able and successfully covering these transactions from financial crime perspective. If we are talking about technology, AI, automation, digitization, all these kind of things, they have really impacted our solution. Now, also, if you look at the payment industry, payments are related to trade finance. So also being, having or covering MX, let's say, messages was also an important thing to cover. Now, as we speak, we are working on, the LEI, and we are considering to work with Hiroshi on that. Also, the e-bill of lading as well is in progress, and we are working in.
Okay, so these are two examples of third-party technologies, because LEIs can also be represented by technologies through the VLEI. And the second you said LEI, and the second was, I forgot now.
The e-bill of lading.
E-bill of lading, of course. I say of course because I think that one is progressing well, given the push by the logistics industry to digitize those negotiable instruments. So have you also integrated additional data sources recently? We know of the Lloyd's vessel tracking, of course. In terms of data integration, what kind of new data sources have you looked at recently, if anything?
Yeah, today, if you look at EastNet's page on LinkedIn, we announced that we extended our partnership with Cedar Rose, and this is related to ultimate beneficial owners information and corporate information. And this is extremely important in case of trade finance. And the reason why is that most of the customers that are working trade finance are corporate. So you need to determine these information. One of the most important integrations that we had is that with a document digitization solution provided by our friends, Complidata. So we are integrated with Complidata, not with Ben himself. We are digitizing the documents using Complidata, and we have this integration. And also we are performing, the document examination, the UCB 600 and ISPP checks.
Yep.
One more thing, which is very important, we are integrated also with the vessel tracking solutions. We are tracking the vessels, verifying the bill of lading, and also tracking the containers. So these are mainly, the data sources that we are relying on. Not also to forget, the integration with the list providers, especially for the sanctions. We're talking about dual-use goods, PEPs, cities and ports, and the other watch lists.
Yep. Okay, so Very good. I saw the news of Cedar Rose this morning on LinkedIn, obviously.
Yeah,
I say obviously because um, everyone is using LinkedIn may have spotted it. I didn't know it was for UBO information, so it's interesting to see that um, yet another registry or data source, trusted data source,
yeah.
helps you do your job more properly, which is where regulators can help, basically. Um, Good. So you have already answered some of the next questions. So I will now move to Ben. Thank you, Hassan, but I will come back to you,
Yeah.
or please jump in as you see fit. And of course, I invite our audience also to raise questions via the chat or the Q&A as you prefer. So Ben, on your side, with complete data's AI automation for trade documents, pre-checks, and red flags
Yeah.
detection, how do you indeed collaborate with third-party technology platforms and data providers?
Yeah, thanks, Andre. Appreciate it. And thanks, Hassan. Great contribution so far. I think one quick comment before I answer the question directly, Andre, which is the World Economic Forum and PwC paper. I thought I fully support. We fully support the goals of elevating trade compliance and trade leadership. If you look at the paper itself, further to be able to both mitigate risk and achieve enterprise goals. I think there were some very interesting examples in there, particularly around collaboration that we're talking about now, but also technology, including a focus on improving sanction screening processes. Plus, some interesting anecdotes around current challenges, like one US bank claiming it was 3 years to get a kind of a sort of global trade module in place. I think genuinely we've moved beyond that now, and then actually being able to use specific new technologies and partners to solve specific use cases without the risk of proliferation of vendors and difficulties of integration. Those days are gone, given how much more straightforward it is to use APIs, to ingest data, to execute specific use cases and build it up into a more comprehensive program using technology. We certainly see that on a day-to-day basis. Many of our clients use us for very specific use cases. Our focus is on broadly improving the lives of folks in trade finance operations by helping to reduce workload and empower better decision making. I think what we try and do is like any fintech in any space should do, which is solve the really difficult problems, which for me means unstructured to structured data, checking documents under LC conditions, improving guarantees, etc., but not trying to reinvent the wheel where there's other solutions out there. So as a result, collaboration is critical for me and for what we do. So I'll get let's go through some examples. We're not a screening company. We'll never be a screening company. Therefore, we partner with best-in-class folks who do screening, which include my friends at EastNets, plus include Sigma 360. And I think the same goes for other existing capabilities that are not new, like for example export controls and dual use goods, where we partner with S&P Global, or all of those capabilities are fully embedded within our solution. So either it's a use case approach I just described, or a kind of full orchestration of trade finance operations, in partnership with those companies. I think the next category that Hassan touched on as well is data providers, where exactly the same philosophy. We'll partner with EastNets and SafeTrade, and then use whatever data provider the client has an existing relationship with or proposes. And that's it could be Dow Jones, World Check, it could be established verification companies, obviously list providers in the broader sense. So in ingesting all of those data providers to enable that goal of reducing time on task and empowering better decision making. Um, so I think that, I mean, those are probably the two most obvious areas where we collaborate to bring benefit to clients. And I think it really plays to that, you know, what's best in class together with what does the client have an existing relationship or preference to, and putting those together, it becomes a trusted advisory partnership in terms of the journey that our clients are on and what we can bring to the table from a proprietary technology and a partnership perspective.
So you're both a piece of technology that others would integrate, like you said, ISNETS is doing that, and you're both integrating yourself technologies from others. Did you mention S&P Global for dual use goods? Is this a piece of technology or is this more a set of data?
Yeah, I mean, there's several companies like S&P Global where
Yep.
you've got a mix of providing data and products, right? So I think, you know, you can argue that the model that they provide for dual use goods and export controls is more of a product rather than a set of data.
Yep.
And I think, you know, we sort of see that across the board. Interestingly, you know, I think, again, we're seeing a bit of a paradigm shift where you've got a lot more activity collaboration-wise with the hyperscalers. You know, we happen to be a Google shop, and we're very happy with that. We use many Google products on the back of the GCP platform, but there's a lot more interest in the hyperscalers in general in trade finance and transaction banking, which we fully support and fully embrace. Likewise, you know, we compete with folks who do similar things to us, because customers may have used them for a very specific use case and want us against another use case. So we actually collaborate directly with, you know, so-called competitors. So I think it's an interesting development where, you know, now you've got this genuine momentum from trade finance banks to solve some of these long-standing problems, and you know, a desire to do less in-house and more with best-in-class partners, irrespective of where they happen to sit in the value chain.
And you mentioned GCP. Can you tell us more about GCP? Is this a
GCP is
Google?
the Google Cloud Platform.
Okay, just the Google
So
Cloud. Okay.
you know, we run all of our applications and all of our trade speed runs on GCP.
Yep.
We employ Doc.ai, which is a Google product, and proprietary AI on top of Doc.ai and GCP to extract data from trade finance documents. We also plug in Gemini, which is Google's large language model. We've also used a bit of Gen AI as well, because we do signature recognition, stamp recognition, which is super exciting because it's always been one of those. I mean, OCR never even got close to text, let alone images, and now we're actually doing kind of image recognition and using the data from images in downstream trade finance processes. But there's, you know, I think it coincides with, you know, it's not just Google, Microsoft, AWS, right? The hyperscalers who are focused on supporting banking have grown increasingly interested in banking and fintech over the years, and you're now seeing, well, you have done for several years, but banks embracing the move to cloud in general. So you've got customer data across banks going onto the cloud at a you know, wholesale banking, retail banking level, which actually then enables more services that run on those cloud platforms to be switched on and tested, maybe the other way around, tested and switched on, you know, which is a pretty interesting trend in my view.
Yep. Very good. Any question from our audience at this stage? Because we heard from Hassan and Ben on indeed their current position in the market and how they integrate various data sources and technologies, or themselves become the modules to integrate into third-party platforms. Any question? If do feel free to raise your hand or to unmute yourself or put it in the chat. But at this stage, maybe I'd
Andre,
like
sorry, we
please.
haven't, just one very quick comment.
Sure.
We haven't mentioned a kind of key category of integration partner, which is the core trade finance processing platform providers, where I think, you know, very few banks these days run their own core trade platform. It's a big and very valuable community of technology companies that process trade finance transactions at a entry P&L balance sheet limit pricing level, with some very advanced capabilities. I think it's a very neat fit, whether it's receivables finance, supply chain finance, documentary trade, and what Hassan does from a compliance perspective, what I do from a sort of commercial workflow perspective with those core trade providers. We're also finding the integrations with those companies faster and more straightforward than ever as a result of those open API standards, together with the sort of changing attitudes in bank technology teams around partnering and orchestrating technology to meet use cases.
Indeed, the major vendors have become very open to third parties, integrating third parties themselves. A fair point, indeed, as they keep on their booking system role in the back office, in the bank's back office. So at this stage, I'd like to go back to Hassan and keep and you as well, Ben, in terms of which additional looking at the future, which additional integrations, data integrations, or access to new trusted data sources like registries, whatever the registry could be. We just heard from Hassan about the UBO information. But if you could dream about more capabilities to automate more checks. We heard about the challenge around pricing checks. What is on your roadmap, or what would you want to get on your roadmap to do an even better job as a technology provider? Maybe Hassan?
Yeah.
Ben?
Thank you, Andre. This is a very good question. Now, having all these data sources, which seem to be like enough, or they're good, and that's it, and we will be focusing on technology, that's it, we have the data, we have everything. There is always this missing part, which is it not only related to trade finance, but it is related to all transactions, which is the visibility and having the data from the transactional data from different players, or the obliged entities in the market. For example, I'll give you one good example: the trade finance registry. Okay, we can see this in a successful initiative in Hong Kong, for example, and now there are some countries that are following, and they started to seriously think about having these registers. These registers were obliged entities in, let's say, specific country. They will be sharing information, sharing documents like invoices, messages even, and all these data and transactions, they will be uploaded on these registers. And here is the value. For example, if you have one bank is financing this specific invoice, let's say 60%, and some other bank is doing this financing for 70%. Here you will have this fraud risk, you have money laundering risk. In some countries, you are only allowed to finance up to 70% of the invoice. So here is a very good way where banks or obliged entities that are working on trade finance, they will be exchanging information, and even they can talk to each other using these registers. And to be honest, we were involved in one initiative. It is not yet official or publicly, let's say, published, but we are discussing and we are designing these kind of register in one country, and we hope that this will be brought to reality soon. So this is a very good example where this kind of data that is usually forbidden, you can see what other banks are doing, or what invoices they are financing. So this would be beneficial, extremely beneficial for trade-based financial crime compliance.
Thank you, Hassan. And indeed, we have already real-life applications in India, in Singapore,
Yeah,
and the regulators are very well aware, it seems, in different countries that this would, except Europe, I guess, where of the value of those registries tracking the funding status of particular instruments, could be receivables or collateral being pledged, like a bill of lading.
yeah.
So indeed, that's a trend that is already ongoing, but still nascent at global level. Maybe, Ben, what's your view on this and potentially other dreams on your roadmap?
I think the registries are a great potential benefit to mitigating fraud risk. I think there is probably a bit more activity outside Asia than you give credit for, Andre. So there have been domestic registries specific to invoices in a number of countries. Turkey is an example, Saudi Arabia more recently. You've also had several European governments looking to promote invoice registries, both in Western Europe and even, for example, in Ukraine post Russian invasion. So I do think it's sort of, and you know, some of those initiatives are driven by factoring, some of which is as much domestic as it is cross-border. But the India registry is relatively kind of domestic focused and factoring focused as well. I also like the idea of more counterparty risk metrics being included. You know, your customer's customer, your customer's buyer, and you know, Hiroshi will talk more to that from an LEI perspective shortly. I think you can look at non-bank information when it comes to risk distribution. Obviously, a fast-growing area of trade finance. But you know, I don't necessarily think the non-bank lenders have been you know, included to a sufficient extent in solutions like the ones that Hassan and I are talking about. I think extending, you know, data, both ingestion and solutions, to bank clients will also help from an efficiency and automation perspective. You know, the more that we can help corporates, the more they help themselves and the banks. And then I think, you know, I did some interesting work with the ICC, DSI, Pamela Marr, and customs authorities, where if you look at some of the innovation in the customs space, it's actually very similar to what the banks do. It's looking at, you know, goods descriptions and price of goods and comparing information on one document to another. So there were some very interesting parallels and some amazing innovations in places like Canada, Nepal, Germany, around the use of technology in the customs space. So I think probably further out on all of our roadmaps, but I think the sort of integration of customs data would be super valuable.
Okay, good to hear about the countries, the additional countries I was not aware of that are looking at invoice registries. Very good to hear. And indeed, the customs space would be, whatever they do, would be indeed, given what they see during customs checks, would be great source of contribution, at least, for helping us check prices. So very good. I mean, don't hesitate to jump in if you have additional thoughts on these topics. I wanted also to focus with Hiroshi on indeed another major industry, non-commercial or institutional industry contribution, industry standards, which is the legal entity identifier. I've been following this topic for 15 years when I was at SWIFT and when the LEI was launched. So I think this is also key for us on the counterparty risk identification. And I will invite Hiroshi to tell us more about the LEI and the verifiable LEI.
Thank you so much. So yeah, please allow me for using slides to make the talk a little easier to understand. Let me share my screen. First of all, just to be clear, let me briefly explain LEIs and VLEIs. And the LEI is a global standard legal entity ID managed and operated by Gripers. And LEI operation itself is overseen by regulatory authorities and central banks in over 50 countries. And the distinctive feature of the area is that it uniquely identifies legal entities globally. And to achieve this, the accredited area issuing organizations such as the London Stock Exchange and the Tokyo Stock Exchange issue LEIs after careful review and regulatory and actively update the data to maintain the data quality. In addition, links are established to SwiftBIC, Bloomberg, S&P, and each country's national registry IDs. And as for the VLEI, it links the role of the individual within an organization with verifiable credentials, including the LEI. And this allows for digital verification of an individual's role with an organization, as well as the authentication, permissioning, and signing. And not just anyone can issue a VLEI, only GRIPE accredited issuing organizations known as QBIs can issue them. This accreditation process creates a chain of trust. And another key feature is that VLEIs are issued only after careful identity verification using procedures that meet NIST Level 2 standards. So unlike standard VCs, where the identity of the individual is unknown, VLEIs are not issued. And in simply speaking, this LEI serves as a common ID connecting various data sources, and the VLEI digitally and reliably handles authentication and authorization for individuals belonging to organizations. So, and based on the WEF report, white paper, I think there are 6 main roles that LEIs and VLEIs can play. First, legal entities can be uniquely identified, as I explained, across multiple countries and business partners. And second, using a common corporate ID makes it easy to link data and cross references. And third, transaction records and evidence can be linked to corporate ID. And the fourth point is that the LEI VLEI can be used to streamline project checks and KYC. And the fifth point is that VLEI can be used to authenticate parties and verify signatures. And the last point is that it increases system interoperability and facilitates collaboration. So applying this idea to the 3 companies platform today, the following key values can be expected. So as for the trade model, we can express a multi-year visibility and auditability by using LEI and VLEI. And as for the estimates, we can reduce, I believe, we can reduce the false positive and stronger AML. And as for the complete data, we can get some faster processing and UCP 600 compliance. And looking at those points from a different perspective and categorizing bit by process in the white paper, as shown in this table. Now, I don't get into detail now, but it becomes possible to form an ecosystem through collaboration between the 3 companies at the KYC stage and the actual transaction flow stage and the post-trade monitoring stage. So my explanation was a bit long, I'm sorry, but there are 3 points I'd like to make stress today. And the WEF report emphasizes the trinity of trust, agility, and transparency. And trade platform vendors, like these platforms today, if they use LEI and VLEI, are in a unique position to embody all 3 of these elements. I mean, again, trust, agility, and transparency. And with that, we can chart a password from RegTech to TrustTech. So that's all from me.
Thank you, Hiroshi. Very impressed in your delivery capabilities of so many indeed interesting slides. I would have taken 2 hours to cover those, so I will learn from your efficiency here. So let's hear from Ben and Hassan on how they see the benefits of LEI.
Yeah, thanks, Andre. I guess I was first on that list. I think twofold, really. One, genuinely mitigating counterparty risk in everyday trade finance transactions. If there's an LEI, it gives a bank confidence that their client is dealing with a legitimate party, not a shell company, not someone who's got sanctions exposure, not someone who's got a UBO on a sanctions list. I think it's one element to the risk assessment, but understanding that KYC, CKYCS at a transaction level, I think is a real benefit to LEI. We've seen the numbers grow significantly. Obviously in a few key strategic markets critically, but I think having that information at a transaction level, even on a trade finance document, is hugely beneficial to a bank making a risk decision in flight. And certainly if there's a red flag and it's been escalated at an investigation level as well as at an in-flight transaction level. I think the second point is it being part of a sort of broader data set around counterparty risk, where I think using LLMs to understand what data is out there on an individual entity that a bank doesn't know, and even their client may be transacting with for the first time. Plus, some advanced adverse media capabilities now, plus even, some of the basic machine learning that we've been doing for years to identify, two-step risk or, ultimate beneficial ownership or presence on a list of some kind, which may be a positive list, not a blacklist. All that goes to sort of creating a risk score around a counterparty, which can be system generated, AI generated, with explainability, which is pretty extensive. So I think LEI and virtual LEI is a key part of that present, which is not the future, it's the present, where, I mean, even with bank proprietary data and LEI, without kind of goods descriptions, you can get to that kind of 0 to 100, risk score from a financial crime perspective. With that explainability, once you layer in those data points I mentioned, you get some really exciting insights into the risk profile from a financial crime perspective of a counterparty to a transaction.
Yeah,
Thank you,
you,
Ben.
Ben. Yeah. My view on that, actually, there are too many benefits of having the LEI and the VLEI. As mentioned by Hiroshi's slides, it's not only related to false positive reduction. This is a basic thing, but I can see it like a very good tool to detect even fraud, whether we are talking about, the payments from payment perspective or from trade finance perspective, because, you will be able, for example, to verify the signers. And this is extremely important when it comes to trade finance documents, especially now we are talking about, the digitalization of trade finance. The other thing is that it will also help in some verifications that we do. For example, identifying the ultimate beneficial owners. If we have the LEI, it will make it easy on the level of the corporate and also on the level of obtaining those UBO information. What else? Too many things, to be honest. The deduplication, the entity resolution, which is it is not let's say a secret that if you have these kind of controls in place, you will have a better trade-based financial crime compliance program, and not only from trade finance perspective, it is also for all different types of transactions, including the payments. So this is my view actually on the LEI, and I believe that LEI will be shaping, the future of the payments and the trade finance from verification perspective, from identification perspective, which is extremely important from trade finance and compliance, financial crime compliance point of view.
Thank you, Ben and Hassan. Indeed, fully agreed. Could not agree more. And indeed, as you say, Hassan, the VLEI offers the identity or verifies the identity of the signatory, which the LEI in its non-digital version doesn't provide. So the VLEI is more extended. It was very clear from Hiroshi's slide than the LEI. I just raised this as I understood this very recently talking to the Glyph team. So any question on this theme or on any other theme, as we have 5 minutes to go? I see one question. From a compliance perspective, what are the global challenges you are facing nowadays related to structured trade finance environment? LC beneficiary and LC application have the same ultimate beneficial owner, and how banks, corporates might be helpful to understand, to ensure to be compliant as much as possible.
Yeah, that's accommodation finance, where it's the same, or even a related entity who's both the applicant and the beneficiary. Obviously, the risk historically there has been higher for domestic LCs than cross-border LCs, but accommodation finance is still certainly common and present in cross-border trade under letter of credit. I think the technology has improved significantly in terms of identifying whether applicants and beneficiaries are related. Not long ago, it would be very manual, and only if there was really some other concern at a KYC or at a transaction level. Now you've got more automated related party checks, including address matching, including relationships between directors of buyers and sellers, where there may be some kind of personal relationship, which I've seen, include social media profiles. Is there a potential, blood link between the director of a buyer and a supplier? Likewise, a lot of what we've spoken about in terms of, two-step risk, where you can map from a network analytics perspective, one company and the companies that they deal with and companies that the companies they deal with, and see whether there's a related party link there. So I certainly think, if you initiate whoever asked the question, if you initiate some of the discussions with some of these amazing companies in this space specific to related party identification, then that's how you really mitigate the risk of accommodation finance.
Thank you, Ben. And I would like also to add on that, if we are talking about this challenge, the main, let's say, tools that can be used is, first of all, to have the ultimate beneficial ownership information, which is the corporate information that I have mentioned before. And this is why we are having this kind of integration as well. So we can also, reveal those hidden links between the entities. Maybe they have like indirect relationship through the controlling persons or the beneficial owners or the management or whatever. The other thing is that the tool of doing the link analysis is extremely important in this point at this stage, because sometimes if you have like hidden relationships, you might not be able to link things together unless you have it like visualized, you have it clear, you have all the entities connected to each other. Also, this, for example, we are using it in our AML engine, where we are looking at for example, the addresses. We can link different, whether they are customers or counterparts. If we have their addresses, we can link them all together and generate a detection. So it is done multiple ways. The key, let's say, features we are talking about is having the ultimate beneficial ownership information from a credible source, and to have these kind of sufficient information, the link analysis, and as mentioned by Ben, the more external data sources you have, the more efficient the link analysis, including the social media, for example. Because some relationships are really hidden. Like even if you look at the ultimate beneficial owners, you would not find the relationship. So this is my observation when it comes to resolving these kind of challenges.
And do you think the regulators have a role to play to increase the publication of counterparty information? I mean, we all obviously have new developments like UBO over the last few years, but is there more for regulators to do?
You have to wait for our paper to be published, Andre, to find out the answer to that.
Okay, excellent.
I'm joking. I think yeah. I mean,
Yeah.
you can look at corporate registries, right? Where the Anti-Money Laundering Act of 2020 in the US, probably the most principal kind of or the most significant new initiative was the creation of a corporate registry, which is now unlikely to progress given the administration change. But I think the use of the use and promotion of corporate registries, not just from a FinCrime perspective, from a broader banking perspective, is one potential role for banking regulators. Hassan, what do you think?
Yes, I believe, there are a lot of things to be done from, or by the governments. For example, the accessibility of those corporate registers. I believe that in many countries, they are still not accessible to technology partners, or not accessible even by some of the obliged entities. So I believe that there should be some sort of a legal reform where the information that can be obtained can be also used by all the obliged entities. And by the way, it is different from one jurisdiction to another. Like if you look at some jurisdictions, they have a sufficient corporate registers, but the issue is with the access to those information. In some other countries, even the corporate registers are almost not there. So I think there are a lot of work to be done in this area.
Okay, I think Hiroshi also wanted to.
Yes, just one comment. Half of our activities of growth is keep quality of data. So I think the most critical point is the contact point with digital and real. I mean to keep quality of data. I mean the UBO activities are great, but most of the regulators or countries doesn't keep good quality of the identity data in countries. So they may have so many corporate activities, and they have to maintain regularly with quality. But those kind of things we have to request to regulators.
Okay, very good. We have come to the end of this session. I see one final question. What risk will such system be able to identify in case of identifying a relation between a supplier and a buyer? I think the risk we're talking about here, if there is indeed what you called accommodation finance, Ben, the risk is fraudulent transactions. So no real economic activity, but just money laundering, basically. I guess that's a main risk.
Yeah, absolutely.
Yeah.
And I think that can also manifest itself in other ways, which is, or can be detected in other ways, like, for example, suppliers paying buyers rather than the other way around. Also part of the kind of broader accommodation theme. But yeah, the principal purpose for buyers and suppliers who are related to each other to transact is to pass value, which is significantly higher than any goods that may be being shipped or not.
Yeah. Okay. Well, thank you very much to the three of you, Ben, Hassan, and Hiroshi. for your contributions. We have recorded this session, so we'll be publishing this in the ITFA member area for playback, and we will also benefit from some DAI capabilities to produce a report on and to summarize the discussion by us as panelists to verify the work of the AI, but this is another area where AI is making an impact. Thanks for everyone joining us today. You know Ben now, and of course you knew him before as co-chair of the FCCi. If you want to join the group and join further debates with Hassan and Hiroshi and 40 other members, do not hesitate to contact Ben or Graham Baldock or myself to join the mailing list so you get the invite to the next call. Any other final comment, gentlemen? If not, thanks you very much. Have a great end of the day.
Thank you.
Thank you, Andre.
Thank
Thanks for
you.
coordinating.
Bye-bye.
Thanks all.
Bye-bye.